Yeah, I'm sure everybody's dream, particularly if you're in business, you want to go big, unless you want a lifestyle business. But going from lounge room to listed is quite a quite a feat. What would be your advice to someone who wants to go from lounge room to listed?
Well, in all fairness, my first business didn't list was my second one. So my first one started in the lounge room. The second one started in a real premises, I suppose, and that's the one we list. Listings are capital raising, to be honest. So it's a way to raise capital. There's lots of ways to raise capital. The easiest way to raise capital is from a customer. You go and sell something,
Mm.
regardless of if you go out to an investor, regardless of the type of investor, and then to raise money, you've still got to then go back and sell to a customer. You never get to avoid that step. And half of the questions investors will have will be about, do customers want this? So the more selling you do before you go get to investors, the less embarrassing answers you have to those questions, I suppose. So when we looked at listing, our business was going quite well. We had about a dozen staff, I say 14 staff at the time, had about $3.5 million in revenue. It was quite a profitable business, to be honest. We wanted to expand. We actually looked at how we got the capital to expand. And this should be the mature way that everyone looks at it. Okay, you have a business, or what do you want to do? Okay, how do I look at a business plan. I take that business plan out 18 months and go, well, okay, in 7 months' time, I run out of cash. I've got a $500,000 cash hole. How do I fill that? There's ways you fill that. You can do it with debt. So, for example, you can, maybe, you have some things you have some things that you could sell, for example, or you can have ways that you can borrow, or you can go and seek an equity investment as well. And then there's a variety of ways to get that. You have, various levels of family and friends. You might have angel investors, all the way through to sort of more sophisticated, professional sort of sophisticated investors, all the way through to a listing on a stock exchange, which I'd recommend you undertake with extreme trepidation. It's a good thing,
Mm.
but if it goes bad, it goes spectacularly bad.
And very publicly.
Yeah, look, it's just, once you're unloved by the stock exchange, it's hard to get loved again. That's probably the size of it. Not that it doesn't happen, but and the Australian Stock Exchange is a place where I'll be, and there's some great success stories. Don't get me wrong here, but for most of the listed stocks, people want a divvy in their tax credit, right? Their reputation credit. So it's not your hot frothy exchanges here in the US where people are wanting to speculate the crap out of things. So just be aware of the sources of capital that you're seeking, and what other sort of burrs they might come with.
I think you're talking about that it's a way to acquire capital and it's part of your overall sort of like weighted average cost of capital kind of thing. I would tend to say that a lot of probably for the last few years, getting funding or getting funded was very much glamorized, and it sounds to me like you want to have your stuff nailed, and you just can't do what you want to do unless you get a little bit of extra juice in the tank, if you will, rather than just sort of like, I've got an idea, let's grab money from everyone, and then hopefully something will happen.
Probably, yeah, it's probably not the best strategy ever. It's there's benefits to listing as well, for example, but it's also not easy at the same time. You've got to go through a structured prospectus process, and quite it's good, and the due diligence process leading up to listing is actually really good. You get to look at a lot of things, to be honest, understand your business a lot better.
Mm.
But and then once you're on there, that you have an amazing sort of market release, the information release facility, their market release platform. So everyone, almost probably every family in Australia, probably 90% of families in Australia, actually have stocks in their portfolio, so they're aware of it. They know a lot. Probably half of those, again, probably casually, at least casually, played the stock exchange with a bit of an E-Trade account or something. So it's a good way to get some exposure out there. So,
Yeah.
but it's I'm a really good chap, a really good mate, and he was actually our company secretary at the first business we listed. He was my chief investment officer for a while, and he's doing some other work with me now. And he always says that it's a bit like a magnifying glass. That when things are going really well, they look really well. They look really good. And when things are really bad, they look really bad. They look, it'll magnify that
Yeah.
good or bad. It'll magnify it essentially. So you be very aware of that. So.
Yeah. Very much a double-edged sword by the sound of it.